Palantir shares finished higher on Friday after a major prediction from Dan Ives, a senior analyst at Wedbush, who stated that the data analytics company is on track to surpass a $1 trillion market value within the next 3 years. This prediction is not just a casual statement. It comes from one of the most closely followed technology analysts on Wall Street, and it arrives at a time when Palantir has been consistently outperforming expectations. Ives' optimistic view came only a few days after the Denver-based technology giant posted a very strong Q2 earnings report. Not only did the company exceed forecasts, but it also increased its annual revenue expectations because of rapidly rising demand for its artificial intelligence products. The company's recent performance has been extraordinary. Since the start of 2023, Palantir's stock price has surged by roughly 2,000%, turning early investors into millionaires in a remarkably short period of time. That level of growth is rarely seen in the stock market, and it has cemented Palantir's reputation as one of the most transformative companies in the artificial intelligence space. In a recent interview on a major business news network, Ives called Palantir the Messi of artificial intelligence, comparing the company's dominance in software and real-world applications to the unmatched skill of one of the greatest soccer players in history. He argued that Palantir stands out from every other technology company because of the quality of its software and the breadth of its use cases. Ives also explained that Palantir is positioned better than most competitors to take advantage of sovereign demand for artificial intelligence solutions, meaning demand from governments and state-related entities that need advanced data and decision-making systems. At the same time, Palantir's commercial business is expanding at a rapid pace, delivering exceptional growth outside of its already strong government segment. The Wedbush analyst recommends holding Palantir stock over the long term because of the company's ability to deliver strong results while exceeding the Rule of 40, which is a measure that combines revenue growth and profit margins. Chief Executive Officer Alex Karp proudly pointed out in the company's most recent earnings call that Palantir continues to score far above this benchmark. Currently, Palantir's market capitalization is approximately $430 billion. If it reaches $1 trillion in the next 3 years as Ives forecasts, that would represent growth of more than 100% from current levels. However, it is important to note that the stock's forward price-to-earnings ratio stands at over 450 times, which is a very high valuation that may be uncomfortable for more conservative investors. Even so, Ives argued that investors who focus too much on valuation metrics often miss out on revolutionary technology stocks, pointing to the last 20 years as evidence that companies like this can outperform despite appearing expensive by traditional measures. Ives has reaffirmed his outperform rating on Palantir, highlighting the company's continued strong demand for its artificial intelligence products. In his latest research note, he raised his price target to $200, which suggests a potential gain of around 7% from current trading levels. This bullish stance is not shared by all analysts. Several other Wall Street research firms have cautioned against buying Palantir at current prices, pointing to concerns about overvaluation. The consensus rating among analysts is currently at hold, with an average price target of approximately $147, which would imply a potential decline of over 20% from current prices. Beyond analyst opinions, Palantir has achieved a milestone that would have seemed unimaginable not long ago. The company reported its first ever billion-dollar quarter, something even its most optimistic supporters might have considered far-fetched a year earlier. This achievement was fueled by an explosive increase in artificial intelligence adoption, which is reshaping how Palantir operates and even how it manages its workforce. For the most recent quarter, Palantir generated $1 billion in revenue, representing an increase of 48% year over year. The company easily exceeded Wall Street estimates and saw significant growth in both its commercial and government contracts. In the United States alone, Palantir's revenue surged by 68% to $733 million. Domestic commercial sales climbed even faster, jumping 93%. Profits also rose sharply, increasing by 33% to $327 million. Based on this performance, the company has raised its revenue expectations for the year to between $4.14 billion and $4.15 billion. Palantir's Rule of 40 score reached an extraordinary 94%, which is a near record level in the technology sector. Executives credited this achievement to the integration of artificial intelligence across every part of the business. The technology is automating many tasks that previously required large numbers of skilled employees, making the company more efficient and more productive. Alex Karp described the quarter as phenomenal and emphasized the astonishing impact of artificial intelligence leverage on the company's results. Karp explained explained that Palantir plans to continue increasing revenue while gradually reducing headcount. His long-term vision is to achieve 10 times the current revenue with only around 3,600 employees compared to the current 4,100. This shift is already underway. Earlier this year, Palantir reduced its information technology team from 200 employees to fewer than 80 full-time staff members. Executives also highlighted the unique role Palantir plays in making large language models practical in real-world settings. Chief Revenue Officer Ryan Taylor explained that large language models alone often fail to deliver reliable results and can make serious mistakes, but Palantir's custom-built systems solve these challenges, enabling real, measurable performance gains. Chief Technology Officer Shyam Sankar added that the company's 20 years of work have created a deep competitive advantage, and he described artificial intelligence as a technology that is giving American workers new capabilities comparable to superpowers. Karp also made waves with his comments on hiring and education. He stated that once someone joins Palantir, their past educational background or school prestige becomes irrelevant. Whether they attended a top Ivy League school or no university at all, performance at Palantir is what truly matters. He also expressed interest in working with labor unions, arguing that artificial intelligence will be central to revitalizing American industry and that blue-collar wages should rise as a result. The positive sentiment around Palantir is not limited to Wedbush. Analysts at William Blair have noted that the company is benefiting from strong momentum in both its government and commercial markets. Bank of America Research has also reaffirmed its buy rating, calling Palantir the best in its class when it comes to implementing artificial intelligence into enterprise environments. In short, Palantir is delivering massive growth, securing a dominant position in artificial intelligence and reshaping its operations to be leaner and more efficient, all while pushing the boundaries of what its technology can do. For investors, this combination of growth, innovation, and execution is what makes the stock one of the most closely watched in the market today. Palantir has seen its stock soar by roughly 2,000% since early 2023, and analysts like Dan Ives of Wedbush believe the company could reach a $1 trillion market value within 3 years. The Denver-based data analytics and artificial intelligence leader just reported its first ever billion-dollar quarter, with revenue rising 48% year over year to $1 billion, profit up 33% to $327 million, and U.S. commercial sales jumping 93%. Palantir's Rule of 40 score hit an impressive 94% as artificial intelligence adoption drives efficiency gains and reduces staffing needs. While some analysts warn about high valuations, others see Palantir as best in its class for deploying artificial intelligence in both government and commercial markets, with long-term growth fueled by sovereign demand and expanding enterprise adoption. But with that being said, I will see you in the next video.